That has got a fair bit of attention over the last couple of weeks. Let's just start with that. How positive is that for Indian pharma companies?
See, it's positive. It's positive for any pharma companies, be it Indian or non-Indian, in generic space. But the point is that you need to be ready with your infrastructure, both regulatory as well as your plant infrastructure. So if there are some problems already you are facing, then this wave will pass and you will be still dry.
Can you explain that? What do you mean you need to be ready with the infrastructure? I mean, so Aurobindo, for example, I think over the last many months has received some, I think what, 15, 16 approvals? So it's basically received the bulk, the lion's share of the approvals which Indian pharma companies have gotten. You're saying that now after the approval they need to be ready to launch it. That's what you're saying?
No, my point is that when these are the things happening, in a sense that if your filing is not complete, if your filing is half complete, that means you could not gain the benefit of this, unexpected largesse from USFDA in terms of good number of approvals, number one. Number two is that if you can't keep your plant as per the standard of the USFDA, then you will be totally missed out the whole rally in terms of giving good approval to the companies, say companies like say Lupin, not Lupin exactly, the companies like say Sun Pharma or Cadila, those who are facing problem for the plant related issues and not getting approval for their key product from the key plant. And as a result of it, they have been left out. For example, Dr. Reddy.
That if you're not ready with the full filings, you will miss out this phase where FDA is approving left, right and center. Just to press on that point, is it because these molecules which are coming up for approval are compliant and FDA seems fit, so it's all happening, it's a coincidence? Or do you see this as a phase where the FDA is kind of loosened up a little bit?
See, I think the best thing is that you have to keep your plant, first of all, should always be USFDA GMP compliant. That is the minimum requirement you always keep, because you don't know when the approval will come. That is one. Second point is that instead of claiming, I mean, many pharma companies, be it Indian and other guys, they're claiming that I have filed 160, I have filed 190, I have filed 200. But the point is that even one of the companies in Indian generic space has filed 40 NDA in 1 quarter itself. Now the question comes is that you should always be filing a quality ANDA. I mean, be it para 3, 2, 4, doesn't matter. So if you file just for the number's sake, is that I have 160 but I am not getting approval, it definitely raises the quality of filings. That means your filing is incomplete and USFDA keep coming back to you requiring many more data which you are supposed to be done in the very first day when you were filing. So as a result of it, your number might be talking something, but reality is talking different.
Yeah, no, that is fine. That is correct. Absolutely. The point is, if you don't have a plant which is FDA approved, will the FDA approve the molecule or the application, or it won't, because you have to specify where you'll be manufacturing the drug from, right?
No, not necessarily that. Even nowadays, USFDA is not giving approval even if you have some serious observation in 483. For example, Sun Pharma's Halol plant, which is under 483, and they are not getting any new approvals in terms of any new key ANDAs. Or for example, you take Cadila. They are also in the similar tight spot. They are not receiving much of approval. IPCA. Same things, Wockhardt, same thing. So they are stuck with their own fault in terms of unable to keep the plant into the growing demand or requirement of USFDA GMP compliance, and as a result of it, they are not gaining actually. So the difference between the rich generic guys, vis-a-vis the mid and small guys, might be to a certain extent twisted, given that the flow from USFDA in terms of new and good approvals might be going in favor of the few ones, and the other ones which could not gain those benefits could be ultimately gain those benefits when ultimately the flow has come to the ebb. So ultimately what will happen is that the major benefit, for example, product like say Abilify, Sun Pharma missed it, Lupin missed it, Cadila missed it. Who gains? Alembic, whose ultimately the annual revenue could be $40-45 million, but this is the watershed for the whole business in US. So the whole valuation, which was roughly around, the company's price was around 300-400, shot up to the level of 700-800 rupees, and which has a very good reason for do so from the Abilify. Cymbalta, another one. Dr. Reddy missed it. Aurobindo gained it, and Aurobindo make a smash off out of it. So that's what I said. The flow may not be same for everyone or symmetric for the whole industry.
Right. Fair enough. So which are the companies which are coming up as winners? So for example, Sun Pharma's got 2 facilities, right, which are under 483 non-compliance, etc. It also has 4 of Ranbaxy's plants which aren't FDA approved now. Dr. Reddy's has got 1, Lupin has got 1, Cadila has got 1, Ipca has got 3. So which I'm just asking you, in this, what you call FDA's largest, which are the companies most poised to benefit, according to you, in this current phase where approvals are coming in fast?
As of now?
Yeah.
As of now in FY16, I think the benefit has gone in favor of Aurobindo and Glenmark.
Sorry, Aurobindo and which one?
Glenmark.
Glenmark. Yeah, there's a company called Impax Laboratories, US-based generic manufacturer, $600 million in sales. They resolved their FDA issues recently, right? It took 4 years for them to resolve the FDA issues. 483, they got a warning letter in 2011, and they got an all clear in September 2015, 4-year period. Is that indicative of how long some of the Indian companies can take as well to resolve the ones that I mentioned, to resolve issues that long?
No. See, resolving issues is absolutely a unique case for every company, and I really don't see any reason for generalization. Yes, but if you have the observation of the similar kind, like say data manipulation, like say GMP compliance, like say if it is injectable plant and then contamination issues, if those are the similar kind of labeling issues, then you might draw some kind of similarity. But totally generalizing just because he has got so if your particular plant is coming under cloud and your filings from that plant will be impacted. But the point, in reality, in operational management, generally you follow the similar process almost in all the plants, right? So for every plant you have a different operation management in place. It's very tough to guess or very tough to actually implement that kind of strategy. If you have a 10 plant and you have a 10 different operation management, is not practical thinking. So as a result of it, when USFDA finds problem in one plant, they generally follow it up very fast with the other plant if those are very key contributor to the US import. Now what happened is that you might have seen is that many companies, one plant has got caught and the other plants are subsequently followed into the same process. If it is not, generally company makes someone which is a bigger one. For example, Halol of Sun Pharma, which is one of the biggest plant in terms of US revenue, so $650 million particularly in a year. So if that is a problem, or Dr. Reddy's Srikakulam plant, which supplies a major part of API, so around 2/3 of the whole pending application coming from that plant. So in that case, I mean, though it is not the fact that the other plant approval will not get it, but the major flow will be stopped.
Okay. Any stocks you really think investors can buy where prices are very attractive? Not for a trade, but you think no hurry to sell.
I think Aurobindo and Dr. Reddy's is a two stock which you can keep a buy on it, keep an eye on it, and if it's cheaper because of turmoil of the US interest rate issues in near to medium term, you should definitely make an entry.
Just one point on Aurobindo. Do you have official coverage on Aurobindo, Surajit?
Yeah.
For the size of the company, for the size of the business at Aurobindo, do you find the institutional coverage a lot lesser compared to some of the other bigger companies? And if you believe that is so, why do you think that is?
I think high leverage is an issue, and as a result of it, there might be some bit of lack of interest because people are more interested about the company which has a much bigger size, and you will get it over there. See, basically, I think Aurobindo or Glenmark, they may not be liked it. It all depends. I mean, once upon a time, there are many companies which used to be liked by almost everyone, and they have fallen. I mean, we know one medical instrument company used to be, darling of the market. Who's who in the whole broking industry used to follow them. I mean, be it MNCs or be it leading broking houses. Everybody had a buy 2 years back. So from that 250, 300 level, currently it is 20 rupees. So it happens. It doesn't matter that how many guys are covering it. It's only matter is that you catch the valuation of the company at the right point of time.
Yeah, I know, absolutely. Aurobindo's got very strong backers, maybe not large institutional investors, but large, HNIs, etc. A lot of backers. But anyway, we'll see how it goes. Your top picks are Aurobindo and Dr. Reddy's. We'll take a quick break here. Surajit, thanks for coming in. Appreciate your time.